Hello, my name is Rupert and I'm Head of Insight Communications at Brego. Just a welcome to the latest Brego Leisure Intel monthly broadcast. And during this, we're going to have a look at what happened in the leisure markets during November 2025. I'm going to summarise what happened in the touring home, holiday home, and the motorhome and camper verticals during November, along with a short summary of the economic and political position that's impacted the UK leisure home sector in recent weeks. It's been a really interesting place to be honest. But let's get underway with the summary of the economy. So we know that the last month has been fraught with a really worrying time from an economic and political perspective. There was considerable concern over what the Chancellor had planned for the budget. Numerous leaks and messaging painted a really worrying picture, particularly around personal taxation and around industry support. As it happens, on the day, there was an element of relief as the budget unfolded. You have to forgive the fact that the OBR released all the details half an hour before Rachel Reeves addressed Parliament. Just one of those things, apparently. But there was no direct increase in income tax, although the freeze on the tax thresholds is a stealth tax that will impact almost everyone over the coming years, but they probably don't really realise it quite yet. But it is most definitely a stealth tax. From a leisure market perspective, there were punitive property tax changes introduced, and those are due to come into effect as of April 2027. Although these are primarily aimed at individual property investors, they may affect owners who let out their holiday homes as well. The overnight visitor levy, or the tourism tax, is also likely to impact holiday homes, and the BH and HPA has warned of the impact this could have on the domestic holiday costs, and obviously that will potentially damage the sector. In addition to these, immediate changes to capital gains tax see the relief on qualifying disposals of EOTs drop from 100% to 50%, and that will impact the succession planning for family-owned holiday parks. However, for the motorhome and camper sector, the big kick came in the announcement of the pay-per-mile tax for EV and FEV drivers. Essentially, this new tax is designed to replace falling road tax revenue on ICE vehicles, petrol and diesels, and this is really being done because of the reduced income that the government are going to get from road tax and also from fuel tax as well. So really quite a difficult thing for us to be able to deal with, and it will stop encouraging people to move to the new propulsion types. But we've got to work with it. It may not be the right solution, but it's the one we've got in front of us for the moment. So as I record this, the Brego broadcast, the Bank of England is still got the base rate pegged at 4%, although it does now look, off the back of the budget, increasingly like this is going to drop in December, as long as the inflation rate dips again. And that is expected to happen. That drop to 3.6% during November was a bit of a surprise. So let's hope for an early Christmas present in December, and let's see what will happen. Unsurprisingly, given the surroundings for the lead up to the budget, consumer confidence dipped again, and the index now stands at -19. Although post-budget views again are that confidence will come back during December and January, but of course, focus during December is very much on the festive period rather than on buying leisure homes and so forth. So we'll have to wait and see. Other key indicators paint a poor view of the economy, as it appears to continue to squeeze consumers really. The unemployment has risen to 5%. The cost of fuel has increased despite the fact that the barrel price of oil is dropping. And the major purchase index rate has fallen a little bit further to -15. And let's not forget that amongst all this, with things as they are, the instant access savings rate has dipped to 2.2%. So really we could do with some more good news to help boost consumer confidence and therefore buying. Now, let's have a look at what's been going on in the used leisure market, and we're using data from Brego Whole Market Insight. And we're going to start, first of all, with touring homes. So total adverts decreased by 7.1%. That's off the back of an increase of 3.8% in October. Under normal circumstances, this might indicate a pretty strong market with good sales, but the reality is that sales were down 28.8% compared to October, and they were down by 6.1% when you compare that with what happened in November 2024. So not a rosy picture. If you look at two-berth adverts, they were dropped by 11.5%. That's off the back of an 18.7% drop last month. And whilst there was sales activity without a doubt, this drop in adverts is due to the reduction of the number of adverts that the dealers are prepared to place at this time of year for cost-cutting reasons. They're trying to keep costs as low as possible. Four-berth adverts were down by 8.4% off the back of 10.3% in October. And again, I think that's due to changes in advertising profiles and costs. The market share split in terms of sales was for two berths 17.4%, four berths 58%, and 5 and 6 berths 18.5%. So that's fairly standard, to be honest with you. Slight decrease in two berths from 18.1% in October, and a 2% drop for four berths from 60%, but a fair level of consistency. From a days to sale perspective, it dropped to 47.2, which is 6.6 days faster than in October. Now, this data, again, is going to be slightly skewed by the fact that the dealers will be removing adverts very quickly, not taking them all the way through to the point where the caravan has actually been sold. Average used touring home price went up by 2.5%, and that now sits at £16,597. Now, for further context, the average two-berth increased by 5%, and the four-berth increased by 4.1%, and six-berth increased by 6.1%. So that's how that makeup leads to that total 2.5%. That's how the split is anyway. When we look at holiday homes, total adverts decreased by 1.7% off the back of a slight increase actually last month. And that shows some stability, I think, which is often uncommon at this time of year. In terms of sales, and that's indicated by the number of adverts removed during November, that highlighted a decline of 23.2%, and that was 6.4% the previous month. Now, that's a pretty big shift from the previous month, and it is probably a true reflection of what the market is like at this time of year. Two-bed holiday home sales were down by 13.5%, and that could be symptomatic of the volume of two beds that are advertised, and they were down 20.9% the previous month. Three-bed sales volumes decreased by a significant 27.3%, which kind of negates an increase that we saw in September of 22.9%. It's likely that this is down to the cycle and the flow of extra rental units coming into the marketplace, but still higher than one might have expected. In terms of days to sale, they dropped from 43.5 to 28.3. Now, that's a notable improvement of 15 days after a 7.5-day improvement the previous month. However, we must remember this will be due to a mix of demand, but also that reduced advertising period where the dealers are cutting costs and just removing adverts before those units are sold. But if you look for more detail, you can do that using the Brego Insight tool, and that will show you that the picture really does vary quite significantly by the age of the unit as well. So well worth going into the platform and having a look in there. The average used holiday home price came down by 2.8%. It went up by 0.5% the previous month, and it now sits at 27,228. And it is again worth highlighting there's significant variance based on the age of the holiday home, and of course it's also dependent on the type of models that are in the market during the month. So, to Motorhomes and Campers, total adverts dropped by 1.6%, which suggests that the market is now in balance, as I said, it is with holiday homes. However, sales in November dropped by 18%. And that's when you compare with October. And the split on that was 14.3% down for motorhomes and 15.8% for campers. Again, use the Brego Insight tool, and that will show you that there was no specific trend by age or type. It was just a general market softening. Trade adverts were down by 1.3% after 10.7% drop previous month. Again, that's balancing the marketplace out for the current market conditions, time of year and so forth. And private adverts were down again by 19.3% after 21.1% the previous month. And we know that private vendors are not really focused on trying to sell their motorhomes and campers at this time of year. They're not focused on that. They're focused on the festive period now. So that does appear to be a trend, and it'll be interesting to see when that stabilizes. I suggest it will probably be February or March time before we start to see the number of private adverts coming up. Days to sell, 65.3, that's down from 66. So just a tiny nibble there, just barely a day quicker than in October. And from used motorhome and camper price, they actually increased by 0.6%, so negligible really, and that takes it to 59,186. So, in summary, November was not a really good month for the leisure sector. There were too many distractions clouding dealers' minds, and consumers' commitment to buy was damaged by a lack of confidence, consumer confidence, and that was particularly because of the budget. But now it's out of the way, we'll see where we go. Simply put, there were less inquiries and less site visitors, and if you don't have people, you can't sell to them. So it made life really quite difficult for parks and dealers to be able to sell. During caravans, all the indicators confirm that the market is slowed, and this is a specific reflection of the time of year for this market vertical, and we will start to see things improve, but not until the new year, I would suggest. For holiday homes, the volume of adverts appear now to have stabilised, which is great, and I will highlight that as experienced last month, the average days to sale did improve once again, although I'm not sure that that will be the case during December. I think it really is down to the changing in advertising profile. Motorhomes and campers, the volume of adverts remains steady, but sales dropped markedly. And as with touring homes, this just looks like the adjustment to the winter market. We really are now heading for the quietest weeks of the year, and the best advice is to watch the retail pricing and work hard at generating new leads. It's always easier said than done. I would also caution that just dropping prices just to get things sold does not always generate sales, but it will seriously impact your profitability. So I hope you found this a valuable update. It is a complex time and it's very difficult to find a way through, but if you need or want more detail, make sure you read the Brego Monthly Leisure Insight Report, which is a little bit more detailed than I've been today, and you can find that on the Brego LinkedIn page and of course our website, or by reaching out to me. We're also starting to post insight and market snapshots on Twitter or X, or whatever you want to call it, and YouTube in the coming weeks, so watch out for those too. But finally, I just wanted to reiterate that if you need or you want to improve market insight, your knowledge of the market and the understanding of the nuances in today's leisure sector, then you must speak to the Brego sales team. They're terribly nice guys. Andy, Safi and Nick would be delighted to show you how the Brego pricing and market data using the Brego platform will help you to improve your understanding, but ultimately increase profitability for your business or park. Thank you for your time. I look forward to seeing you soon.